China has the world's largest economy in terms of purchasing power parity GDP and the world's second richest country in terms of total wealth. The country has a rapidly rising big economy, is the world's largest manufacturer and exporter, has the world's largest standing army in terms of military personnel, has the world's second highest defense budget, and is an officially acknowledged nuclear weapon state. But why are billionaires losing faith in an economy that has been one of the most reliable cash cows for investors for decades? In today's video, we'll take an intricate look at why billionaires are abandoning Chinese assets as Chinese markets are crashing. But before that, make sure you press that red subscribe button along with that tiny bell icon to get updated every time we post new videos. Let's get started. Over the last 20 years or more, China has developed into a global powerhouse. It went from being mostly a rural state with a lot of government control, which stifled innovation and wealth creation, to being primarily a capitalist state, which allowed firms to flourish and people to become affluent. Alibaba and Tencent are two of the world's largest and most successful companies, with decades of experience growing markets and expanding operations. Most people believe they were investing in the new United States at a time when Western investors were eager to supply them with the capital to do so. The next country with the natural resources, population, and acumen to grow itself into a capitalist superpower capable of generating trillions of dollars in riches is rather obvious. Firms in China have more potential consumers, employers, and partners than businesses in other nations due to their enormous population. But still, why in recent times billionaires are selling their Chinese investments and don't want to invest in China? Because of all of this progress, all of this wealth creation came with a giant omen hanging over it: the Communist Party of China. Most people now believe that as China becomes wealthier, it will liberalize. The CCP will shed its authoritarian characteristics, and China will eventually become a true democracy. Of course, we all know that notion never came to fruition. The CCP clearly allowed capitalism to thrive primarily to increase the country's wealth and, as a result, the CCP's power. And this is what it all boils down to. This is why investors are withdrawing their funds and fleeing the country that has been their cash cow for decades. The CCP is becoming more authoritarian, not less, and is no longer allowing these businesses to generate income, innovate, or grow. Billionaire Cathie Wood, once in an interview, said that there is an increasing number of social unrest because of the increasing cost of real estate, which is 75% of the consumer savings in China. Cathie invested in a number of big Chinese companies like Alibaba, Tencent, and other neo-companies because she believed they would be allowed to flourish and that the CCP would appreciate the beneficial effects these businesses have on the economy and the country. But she was mistaken. They began to attack companies Cathie invested in and eventually prohibited profit in the entire education industry, as well as prohibiting foreigners from participating in it. Cathie woke up to the threat that the CCP possessed and removed all of her funds from the country. The entire Chinese market is already in a downturn, and it's directly due to the CCP's actions and investors' capital flight. Monish Pabrai, a wealthy fund manager, prefers value over growth investments. Despite this, during the previous 2 decades, Pabrai has found a lot to love in a range of Chinese enterprises. They are unfairly undervalued, given how profitable they are, how quickly they're growing, and the expansion of their sectors. The CCP's continuous attacks on major corporations, on the other hand, have impacted Alibaba's stock price over time. Pabrai began selling Alibaba stock and has now liquidated around 80% of his previous investment in the company. Why has he acted the way he has? Simply put, his conviction in the CCP's ability to help Alibaba succeed has diminished within the company. Moreover, giant property developers like Evergrande and Fantasia have been on the brink of bankruptcy for over a month now, and every day that passes, they are simply getting closer to completely collapsing. Their financial obligations are enormous, and the industry as a whole is over $1 trillion in debt. At some point, every company in the country that carries this debt will fail. Property values have begun to decrease as well, and while the housing sector has a significant impact on any country's economy, the scope of the housing market in China is unprecedented. Property accounts for over 70% of Chinese residents' household savings. The business directly employs tens of millions of people and indirectly employs hundreds of millions, and the collapse of the property market might cause a massive recession across China. To summarize, the Chinese economy is far from steady, and it is currently on the edge. So that's all for today's video. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.